Hi everyone, my name is Naledi and I am your tutor for the day. So today we'll be looking at changes in ownership. At third year level, there are 9 changes in ownership that are tested. The first one is when there's a decrease in IFRS 3 without loss of control. The second one is when there's an increase in IFRS 3. The third one is when a simple IFRS 9 investment goes to IFRS 3. The fourth one is when an associate becomes IFRS 3. The fifth one is when IFRS 9 goes to an associate. The sixth one is when there's a total disposal of an associate. The seventh one is when an associate decreases but still remains an associate. The eighth one is when there's an increase in an associate interest. And the last one is when an associate becomes IFRS 9. Now, I'm actually going to look at 2 of the changes that can happen regarding a IFRS 3 change. So when there's an increase or a decrease in IFRS 9. The guidance is given in IFRS 10, paragraph B, 96 in terms of how you can treat that change in ownership. So I'm going to read to you the paragraph, and it states, when the proportion of the equity held by the NCI changes, an entity shall adjust the carrying amount of the controlling and the NCI interest to reflect the changes in their relative interest in the subsidiary. The entity shall recognize directly in equity any difference between the amount by which the NCI are adjusted and the fair value of the consideration paid or received and attributed to the owner of the parent. Excuse me. Now, what this simply means is that when there's a change in ownership based on the fact that there was an increase in the interest held by the parent or there was a decrease in the interest held by the parent, there will be an effect on the NCI. I have 2 examples that I want to show you. So the first example happens where there is a decrease in the NCI, meaning that the parent purchased some portion of the NCI. So in this case, the parent has 60 at the beginning and the NCI had 40% interest. Now the parent purchased the 20 interest from the NCI, and the NCI then had a remaining interest of 20%. So what you do is you need to do this calculation, taking the total interest, you minus goodwill, you multiply that by 40 to get what 40% interest of the NCI was before there was any change, and then you get that amount to be 66,900. Now, after the change, meaning when the parent has now purchased 20%, the NCI is left with 20%, and that 20% is 33,450. The difference between the interest before and after the change is 33,450. Then the fair value that the parent paid to acquire the 20% is 40,000, and the change in ownership will be 6,550. This amount will be transferred directly to equity, meaning you have to do a separate account called changes in equity. With the second example, this is where the parent disposes of their interest, meaning now they're giving their interest to the NCI. Now the NCI at the beginning had 20. Now after the change in ownership, the NCI has 40. You do the same as the above, you get a difference of 30,500, and the NCI had to pay 35,000 for that, and the change in ownership is 4,500. It's important for you to know the journal entries for this, and it's also important for you to know how to construct the financial statement where there's a change in ownership. For more details on how to tackle this issue, please contact me and I'll gladly help. Thank you.